Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Thursday, February 1st, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts, start with the big picture, work our way into the day itself. Just a reminder that about 6 weeks ago, we tested long-term resistance that was expected, a targeted zone of resistance that now in the low 250s, 252.73. At the time, I think was in the low 260s. When we were testing it, as we were testing it, I mentioned how you should then allow for the market to fall back to channel support over the following 2 to 3, 3 to 5 months. That is now at 174.76 on the weekly chart and descending gradually. That happened in about 5 weeks, 4 or 5 weeks. That hasn't completed itself. It still has yet to be tested, but I think we've closely approached it, as I think you would probably agree with this chart. And when I said allow 174.76, I meant that. There's just no way you know for sure as an objective whether you're going to fall to this area, but I've been mentioning how you could prepare for it, you could trade it, you could set up, you could reach for 170, 180, strike out of the money, puts that don't expire for at least 6 months, that kind of thing. I was saying a lot of that. Now, on the way down, just a few weeks ago, we did close clearly below a rising channel bottom speed line combination that is presently well above the market in the lower 230s. That was our clarifier, if you will. Basically, the indication that, yes, indeed, expecting the mid 170s and dropping. Now, preceding 175.03 in the daily chart is 177.25, which is a 5/8 downside Fibonacci from the January 23 low against the more recent July high of last year. So it really is a zone. It remains in reach between now and the end of next week, holding below, and now I'm going to zoom in here on the daily chart, steeply descending 1/3 speed line and channel top combination that are within 2.5 points of each other. 190.23 is the channel top, 192.63 is the speed line. A settlement above 192.63 would signal a bullish continuation within a week or two up to this 216.72 descending 1/3 speed line. That is based in part on last week's low. And so I'm going to say a few things about this chart that if we test 175.03, our 3 to 5 week bullish rotational recovery objective would be some variation of this 216.72 descending speed line. When I say some variation, what I mean by that is when we take out the low from about a week ago, we have to reconstruct that speed line, but it'll be in the upper 210s regardless, unless we continue falling south aggressively into the 160s, 150s, so forth and so on. Then it's a different story altogether. But as we test 175.03, 3 to 5 weeks, you can take. So I'm talking to a number of trader types right now. Some of you are day traders. Many of you are day traders. Some of you are 3 to 5 day swing traders. Others of you are, 2 to 3 month swing traders. Maybe you trade options. And so I'm kind of talking to you right now, the longer term folks. Now, of course, 175.03 is a solid day trade support level for day traders. It's also a good 3 to 5 day swing trade level, but it's also a 3 to 5 week swing trade. So once we test 175.03, you can anticipate this 216.72 descending 1/3 speed line, where we could rally up there within 3 to 5 weeks, top out there for 3 to 5 weeks, back to the channel bottom. We could fill this gradually narrowing wedge out all the way into March activity. And that is kind of what I would describe as the near to midterm framework as we move into March trade. And as I just mentioned, if we close today above 192.63, I do see follow through buying into next week, possibly by the end of next week, although with this steeply descending line study, I'm going to say a 1 to 2 week target. If we close above 192.63, you can anticipate 216.72. Now, if it gets bullish today, and, it could happen, but I'm not expecting it. But if we do push through 192.63 today, which you can see here, we can test 199.24. In fact, I think we probably would test 199.24 today. That could be it for the upside today. But once again, closing above 192.63. I see no good reason to be short Tesla if your time horizon is 3 to 5 days out to 2 weeks, somewhere in there, because over that time frame, I would anticipate 216.72, where if you're a 3 to 5 day swing trader and you went long above 192.63, you would take profits and go short. And so 3 to 5 week swing traders, you're selling 216.72, you're buying 175.03 until it no longer works, in which case your risk management comes into play. Let's talk downside about all that in the event, and it could happen tomorrow, where we actually do close the end of the week, Friday, below 174.76, that meaningful support, that needs to be by a 1% margin. So it really is a 1% violation of 174.76. It really is a Friday settlement tomorrow, 173.01 or lower, that sets off another significant sell signal that should then yield that 101.81 to 106.64 region within a couple of months, 2 to 3 months, could be as little as 3 to 5 weeks, depending on volatility. But that is the next target if we close tomorrow 173.01 or lower. No good reason to be long Tesla as we move through the month of March, because over that time frame we will continue, in my opinion, falling into the low 100 area. Options traders, I will say this with options traders, big picture, as we're testing the mid 170s, that long-term support, you might reach for 245 or 250 strike out of the money calls that don't expire for at least 6 months. And inversely, if we close tomorrow 173.01 or lower, you want to liquidate those out of the money calls and instead reach for 102, 104 strike out of the money puts that don't expire for at least 6 months. And that is kind of the big picture options trade right now. I will also say that as we're testing the mid 170s, 175.03, you might reach for 210 strike out of the money calls that don't expire for at least, I would go a couple of months out. I think that's a 3 to 5 week move, but you want to go further out, typically twice the distance in time as your projected objective. 3 to 5 week target. You want to go a couple of months out at least. Let's talk downside today. I don't think I covered it thoroughly, and I will say that we actually tested it on Wednesday afternoon, and that is to say 186.28 is a downside 5/8 Fibonacci off the last week extremes. That is to say last week's low against Tuesday's high. We slipped through it a bit. 185.84 was the low, but we certainly closed above it. 186.28 I see as our pivot point for the day. Now, if we break or open below 186.28, I don't necessarily anticipate 175.03, but you should certainly allow for that. Given the dynamic below 192.63, this market remains clearly on its heels, on the defensive. Over the next 3 to 5 days, I expect 175.03, and if we break or open today below 186.28, we could reach it today. There are these carefully chosen minor points on the way down, and you can trade those if you're an aggressive day trader, but holding above 186.28, 190.23 to 192.63 remains in reach, and if we push through 192.63, 199.24 is likely today, and if we close above 192.63, I see that as a buy signal into next week. 216.72 then considered a 1 to 2 week target where we could top out through the rest of March and fall away again. Until then, we are on the defensive. 175.03, our targeted resistance, support, in reach by the end of next week or sooner. I think I've said it all. Anything beyond what I just said will be repetitious. So please click like, share, subscribe. Check out wickedstocks.com. We put out another stock pick on Wednesday. Why can't I remember it? Shopify was Tuesday, and on Wednesday was AbbVie. Yeah, so they're both at the precipice of significant signals, and you owe it to yourself to check it out, especially if you are an individual stock trader. We offer a 5-day free trial, so check out this week's stock picks by taking advantage of that 5-day free trial. I'll be back tomorrow, of course, with Friday's Tesla, and you have a great day.